Hello value investors, thank you for joining me. In today's video I want to talk to you about investment temperament. How having the correct investment temperament is mandatory to have strong returns over time. So if you're new to the channel, please subscribe now so you can get my next video installment. Remember, this is our value investing journey. So let's get started. Number 1. Remember that quote from Warren Buffett that he says, when we, meaning Berkshire, buys a business or buys a stock, it's interchangeable. In his mind, he says he doesn't mind whether the stock market closes tomorrow for 5 years. And that's not just him saying it, he's really leaving you a legacy that you can follow. It's not how to get rich quick, it's how to get rich very slowly, but get very, very rich over time. Now, when you come to buying a stock, that is really the level of commitment you got to be having with yourself. You got to think, and it really does help. If you think, I'm buying this stock today, and I can't get out of this stock for a minimum of 2 years. If you put this level of commitment, if you put this temperament into yourself, I'm buying a piece of the business, I'm committed, and I will not sell out come hell or high water for 2 years. If you put this level of commitment, this mental block before you make the first purchase, your returns will truly magnify over time, because the biggest mistake an investor can make is sell out at a loss. If you keep avoiding losses and you keep working hard to avoid those losses, over time your portfolio will have strong gain. Number 2, I want you to think about when you buy a house. When you go to make a purchase, to make your house a home, when you make that investment, it takes a long time. You move into the neighborhood, but you don't know everything about the neighborhood. In the first few days, you're still discovering things about the house. Oh, I didn't know that was there in the bedroom. Oh, I didn't know that window was broken. Oh, I didn't see that when I made the first valuation of the property. And then you're still learning the following week, oh, I didn't see that shop was right around the corner. So it's a learning journey. So no matter how much hard work you did going to make the purchase of the house, you still learn stuff subsequently. And it's the same with a business. You need to understand the power of uncertainty. You are demanding a large margin of safety because you're saying to yourself, okay, you know what? I don't really know everything about this business. It's going to be a learning process. So you have to have that commitment to the business. You got to say, I'm going to be tracking this business, not necessarily on an hourly basis and just looking for some news bit or the share price. That tells you nothing. I'm talking about not too much hard work, but do read through that 10Q and that 10K. Now, I know that everyone says, oh, there's a lot of stuff that I don't understand. They make it really simple for you, okay? So, in the risks, you just need to be familiar with the top 3 risks, really. The rest of the stuff is just kind of boilerplate. Just look at the top 3 investment risks. The management are telling you, it's a government document, and they're telling you, this is what we believe is our number 1 risk, okay? And you just read for the top 3. You go through the management discussion. There they're just telling you brutally honestly what the business did over the last quarter. So just read. It's a few pages, unless it's like it's a conglomerate with many different businesses and underlying assets. It's normally, even with Apple, there's something that's quite small, it's like 5 or 6, 7 pages. It's not a lot that you need to read there. And once you've read through 1 quarter, you kind of know what to look out for. So read the 10Q, read the 10K. They only come out every 90 days. So that's easy. Go through the earnings call. Just try to spend a bit of time going through that. So I'm telling you about building the right mindset of an investor. It's very rare that you will do all this work, you'll buy the investment, and you'll be out within a year. More often than not, businesses take a long time to increase the earning power, to increase the intrinsic value. So you having that right mindset that this is going to take a long time, having the correct temperament, will help you become a better investor over time. In essence, I'm trying to tell you that it's important to realize you're not going to know everything about the business. Even if it's a very well followed business and you've read a lot about it, there's still new things you're only going to learn once you buy that first share. Once you buy that first share, you're the owner of that business. It could be Apple, and you're just one of, let's say, millions of investors in Apple. But until you buy that first share, you don't know anything about your business. Once you're a business owner, you own that share, you own a portion of that business, then you think like a business owner, and then you're going to be learning more things over time, things that are critical. So only when you have really skin in the game is the work coming in, the temperament that you're building. So you build on the preparation to the event of buying the investment, and then you continue to build over time. So having that uncertainty, having that understanding that you're not going to know everything is critical to your investment. Power tool 3. Buying in small chunks. So I'm telling you about how to get the right temperament aligned. How you're not going to know everything about the business until you're a business owner. So it only makes sense, really, that you buy in small chunks. Don't go all in. The best example that I could think of was in the same world that in a startup world. You kind of go through different fundraising. You might meet the same investor, but it's a cycle. They get to know you a little bit. You said you're going to do X, Y, and Z. Then you come back 6 months later. You deliver on X, Y, and Z. So it's a learning curve for the investor. So it's the same thing when you're buying a public business. So you buy a share or a few shares of a business, and then over time, you get to know a bit more about the business, and then you make another chunk of the investment. Now, the purpose of layering it in, or dollar cost averaging, or averaging to your investment, is really that gives you that extra edge, because you're trying to get more of the business at a bigger discount. Realistically, your opportunity to find the next Netflix, or the next Apple, or the next Amazon is quite slim. It's negligible. So you're just trying to, more often than not, get a reasonable business, an average business, and you're trying to layer in your investment. So more often than not, between you buying it, it's going to come back down over price before it goes up over price. If the business happens from the day you buy it, it just rallies off, I would not chase that investment, because you're already kind of cutting in your upside. You want to try and buy it when it's coming down, so that you build a bigger position at a larger margin of safety. So in conclusion, let's go through the 3 areas that we discussed for building your investment temperament. Number 1, think of buying the business, and it doesn't matter if the business was to go unlisted tomorrow and it wouldn't come back to being listed in about 3 years. Be committed to the business. That was number 1. Number 2, the power of uncertainty. You don't know about your house, you don't know about your business until you've been a business owner for a period of time. You're going to learn things over time that are not available to you. You're not mentally predisposed to that business until you become the owner of that business by acquiring a share. Power tool 3. Just remember to average into your investment, to leave yourself plenty of margin of safety. The more of the business you buy at a bigger discount, the bigger the reward will be for you as a shareholder. I hope you found this video useful, and I'll see you soon.